Good afternoon, everyone. This is Christian with PerfectStockAlert.com. Today is Monday, April the 19th, 2010. I picked up a bit of a cold this weekend, so bear with me. The Dow Jones Industrial Average rallied 73 points today, while the NASDAQ lost a point, basically. And that's a split fashion close. But with the Dow Jones as high as it was today, it is odd that the NASDAQ didn't have any upside gain at all. We'll talk about that in the future as to why that's going on. I've kind of foreshadowed that, basically talking about how small caps are going to be having a hard time in this credit market we have today. So we'll talk more about that later. But for now, just let's analyze this chart. Was this rally we saw today, the 73-point gain, an opportunity to be buying? Is there really conviction here behind buyers? Let's have a look at it. The slow starts, you'll notice here we had a while back when we pulled back after this rally here. We pulled back and formed a nice solid candlestick hammer formation, telling us there's support right here. And when you scroll on down, you'll notice that support was right there. Okay, that candlestick lines up with this strong buy volume right here. That is whenever you see big substantial buy volume or sell volume, you know that somebody with substantial money is getting in or getting out. Basically a major trade going on, and you want to see this strong buy volume in the bottom of a pullback. Okay, that's where I would do my buying. That's what they would do theirs. That's an important piece of information. And of course, you want to see major selling at the tops. Okay, so if we go and we look at Friday's activity, we see substantial selling right here, and it's on this candlestick right here. Let's line those up right quick for you. There you go. All right. Substantial selling. Now this is a 3-month chart, daily. I'm sorry, a 6-month chart with daily candlesticks, and this is Friday's activity here. So you get substantial selling. I don't have today's volume on the chart yet. That won't be available to me until a couple hours from now. So rather than wait to make this video, I'm just going to go on with my analysis, and we'll double check it tomorrow, so to speak. Okay. Now you'll notice on this buy point that we had back here, your slow stotch signaled it by forming higher low points, basically signaling the reversal. Even though price activity was moving lower during that same period, the actual trend was to the upside. You need to be doing your buying down here. Had you listened to the slow stotch, you would have known that. In this case, you've got the opposite. Everything's the opposite here. You've got the substantial selling on substantial sell volume. That's what you should be seeing. That's what you should be doing yourself, I mean, in my opinion. That's the right call. You're extremely extended from this major support line after breaking this major uptrend line. We'll talk about that in a minute. But now we've got this move to the upside, and some people will be wondering, should I be buying here? Well, according to the slow stotch here, look at these low points getting lower and lower. No, they're signaling right here a downtrend while the price is still trending higher. That again is a bearish divergence. This was a bullish divergence right here. Let me raise that up. Sorry, couldn't see that. This was a bullish divergence here while price was trending lower. You should have been betting on the long side. In this particular case, you have the low points of the slow stotch rolling over, going lower, and that's showing a downtrend while price is trending higher. See this little black dotted line I've drawn here? They're bouncing off of that between this point and this point. They're trying to bounce off that today and sustain that. I don't like that anyway. I don't like Friday's sell volume, and I don't like this trending lower while price is trending higher. That's a bearish divergence. I don't trust this. I will trust this. Okay. You also notice the same conditions on the RSI. Let's roll on down to that. RSI trending lower. Okay. Don't like that. We are kind of getting really choppy here. We have a higher high, so you've got some choppiness going on there. And we do as well have more earnings coming out. I expect companies like Wells Fargo will report good earnings. I mean, if Citi can do it, anybody can, compared to the quarter at least. So I still see reason for a move to the upside for bulls short term, but you'll notice they're selling off the news. They're basically selling the news, the old pattern you've seen 1,000 times before. Like I said, going into the earnings season, I think this is the last kick for bulls before the bears just really get their pullback. So be watching that. Also, if you're just looking at a 3-month chart, you're only seeing half of this chart because this is a 6-month chart. So if you only watch a 3-month chart, you're only seeing this right here. You may be looking at this going, oh look, it's an uptrend, wait for a pullback and buy. Well, I'm going to show you something right quick. You always want to keep in mind both the long-term and the short-term charts when you're looking at any market or individual stock. This is a long-term chart, a 4-year chart with each one of these candlesticks being 1 week, and you'll notice if you're using a 3-month chart, this is all you're seeing, that right there. Okay, you definitely want to be looking at this, because if you were looking at a 3-month chart, you see this uptrend, you're thinking, oh, I'm going to buy the next pullback. Well, what I'm seeing by looking at the whole big picture is this downtrend. Okay, well, and this lower lows. Okay, so yes, you're the upside, you're bounced up here, you broke out of that, but regardless what you do, this is not reversal until you've pulled back to test the low. You've got to see low points ascending higher. Right now we're still seeing them drop lower, so on the bigger picture we're still in this downtrend right here. Okay, and that's going to weigh on this market. Sooner or later it's going to pull back to test that low. That low will likely hold. I would expect it to hold, at least for the major companies, the quality companies. I think small caps can have a little bit harder time, but all in all, we'll get into that later. For now, just be watching this market, because you're in an uptrend, yet you're in an overall downtrend. Okay, it's kind of, we'll get into that later. Another thing I want to show you right quick before we call this the day. Look at the sorry. Let's look at the Fibonacci. You'll notice here your 50 line we've already talked about right here, this dotted blue line. This is the 50% retracement here. Right here is where you should be shorting, at the 50 line and this line right here. Okay, you're going to see resistance here. You've also got the 200-week moving average resistance line right there. Definitely be, I'm definitely bearish here. I don't care what the market's doing. You need to be a bear right here, according to the fibs, as well as my analysis overall. This thing is extremely extended. Let me move that off there. Extremely overextended, and now she's moving in this uptrend pattern that's a bull trap in my opinion. So be watching that. Again, thank you all for referring your friends to our website and for sharing our videos with everybody. Please continue to subscribe to our YouTube channel and join us on our Facebook page. We'd love to have you with us. Our website is 100% free. Go there and see what's in my portfolio. God bless, and I'll see you all tomorrow.